Hello everybody and welcome to Street Smart Investing. I'm your host Albert, and today I am going to be doing the next episode and the next video for this sector. And this sector that I am doing is apparels and accessory retailers. So basically I'm choosing my selection of Citi trends versus the top earning company for this sector. This is the secondary sector. So again, this is the main sector. So let's begin. Today is February 1st, 2021. I know I've been busy. I haven't been posting. It's been maybe over a month. I've been too busy, but I have some time today, and it looks like I'm slowly building my time again. So I'm almost done with certain things and putting school at a close, and it's coming to an end, so I have more time to do videos and have more time to do some stuff. I'll try to update my videos a little more. I know I've been inactive, but I can only do what I can. So let's begin. If you're gonna invest in the stock market, again, any decision you make is solely based on you. So any gains or losses is basically and solely your responsibility. I am not a financial advisor, so if you do want to invest in the stock market, you can always speak to a financial advisor, or if you have a 401k plan, you can ask your administrator or whoever is in charge of your 401k plan. So yeah, that's just for me not to I know a lot of people advise, oh yeah, you should buy this stock and sell this stock, but what people don't realize is that it can damage reputation on people who actually recommend it, and then all of a sudden they lose money. So again, I cannot make recommendations, and I strongly believe nobody on YouTube can make recommendations unless they're licensed, because they can get sued, and it's not a pretty sight. I just take this very seriously. I know people get excited and emotional, and but there are consequences. So the only thing that I can recommend, and anybody can recommend, is to have stocks on a watch list, and that's it. You can only do your due diligence and find further information all on your own. There's so much information out there that you can do it as well. So just wanted you guys to know that all over again. I say it every now and then in my videos. So yeah, let's begin. So Citi trends, I've had it in my previous video from maybe a few months ago, and this is for the monthly portfolio, or the custom portfolio that I've created. I think it's a strong portfolio. It's a long-term hold, meaning you can hold it for a few years. It's over a year. So I think number 6 is Citi trends, and basically it's not in a certain order, it's just, or by price, it's just by letter. I just alphabetically put the stocks in that order. So Citi trends came up number 6. So yeah, February 1st, it's at $58.25. Sorry, I'm moving so much. Try to hold it still. Okay, so for the whole year, it's gained 150%. Volume has been low. I'm only pointing out the obvious and things that need to be discussed. This can be, that's a big one. I know I'm drawing on my phone. This is a whole new thing since it's just a little bit better, you know, and then I can always erase on my phone. So this is kind of a new thing that I'm doing. And I apologize that my screen is cracked, and that's another reason why I've been kind of embarrassed to do another video, because my phone is cracked and I need to get a new phone. But I hope you guys do enjoy this video. And again, fundamentals just, you know, it seem to not matter anymore. But this one is important. There's nothing here for dividends, but those are the ones that matter to me, and fundamentally. And then for short term, that's what matters to me, and this one too. So yeah, just wanted to share that with you guys. Let me erase that. So we have the 1 year trend. You can see they went from about let's see, it started around about $7 all the way to 58. $58. Not a lot of orders, but on the 27th they did do supposedly a large order. Again, I still don't know, and I still am trying to figure out what exactly is a large order. In the sense of shares, not like by price. I mean, I don't know. It could be like, I don't know what's considered a large order. What, 10,000 shares? I mean, I don't know. But yeah, so let's get that analysis from based on one analysis. So there's not a lot of analysts that have looked over the stock. And as you can see, high, average, and low, I guess that hasn't even been reviewed. So there's been a lot of buying, and that was for today. I'm pretty sure there's been a lot of buying for a lot of stocks, since the stock market overall has gone up today, but last week has been pretty bad. So last week would have been a good time to buy. But again, you still want good prices. So just 1 week of going down, that's still not enough. You still want something better than that, a better discount. So yeah, as you can see, it broke around here, and then let's say since around there, for that price, around $25 it broke, and then it broke around September, October. I'd say in October, probably late October or November, because from here to here, that's September to December, so say around October, early November, or maybe mid-November, that's when it broke. Dividend, I don't think these guys pay a dividend. Highly doubted. I think this was a growth stock, if I'm not mistaken. Pretty sure they issued a dividend. Oh wow, yeah, that was the last time in 2020. Okay, so they did issue a dividend. That was when they stopped in the March. So yeah, this is what's important. So I got 2020 estimates and info, so that's pretty good. I've been saying that since I think the last video, I can't remember if the last video I did was for this year or was for last year, but anyways, I'm glad I got 2020 estimates. I guess they met expectations, and then return on equity about the same, return on assets about the same, show me earnings, that's about the same, that's not bad. And again, fundamentals are out the window ever since March of 2020. Everything's just been crazy, and I've been saying that since March. It's just been nuts. But I still look at fundamentals for really good dividend stocks. As for growth, for growth, it's hard to find dividends, and then fundamentals is just it's nuts for growth stocks. So margins are not too bad. The debt, I don't like that, but it's understandable. Cash flow, cash reserve, it's not bad. 2020 estimates, wow, they didn't beat it for 2020. So this is another important factor. Net income, that looks good. It's slightly up, that's good. So that's not bad. Balance sheet, wow, 2020. Look at that debt. That's double the debt. They doubled on that. So they did go up in earnings. So yeah, like everybody said, oh yeah, earnings season is gonna grow, but that's all the money printing that happened in March. That's why stocks are way overpriced and fueling. I've always thought stocks been overpriced, to be honest, ever since ever since around 2016, actually. Stocks have been really overpriced. Cash flow 7.6. So what was the last one? 42. So we have about 35. So that's not bad. Not too bad. They have some cash, about 2 million. And again, these are the numbers. Earnings look okay. This I don't even look at. Dividends they don't even pay. The debt return, I can't believe it's 9%. I think it's more than that. PE, that's pretty high. And the debt, obviously, taking on a lot of debt. So yeah, urban wear, urban clothing store that they provide. I mean, I don't know if it's fundamentally sound. Well, it is. But what I mean is, because looking at the debt, typically from the years that I've been investing, if I see a debt like that, I wouldn't take it. But under the circumstances, it's hard to decide what's a reasonable amount of debt. So I usually don't go nothing above like 35 would be my limit. But now it's like it's crazy. I wouldn't be surprised to see companies that like are 50%, that used to be in at least like in the 20s. I usually see those companies that I like and that I usually see that are good, 20, 25, but anything around 30 is kind of pushing it to my limit. But again, like I said, ever since last year, it's crazy with the debt, stacking on debt, and it's just hard to to see how all these numbers fit in when people keep racking up debt. When I say people, I mean companies. Sorry, but yeah, it's overwhelming. So we have Citi Trends versus Hibbett Sports. I never even heard of these guys. So Hibbett Sports. So we have they're not even a $1 billion company, about the same price. They just earn a little more. They don't provide a dividend. They're growing slower, so they're a reasonable rate. 1 year trend, look at that, it's pretty high. Orders, not too bad, large scale orders. They're getting orders. Analysts are recommending 25%. Okay, based on 4 analysts, so 4 people. So you had 2 people say hold, 1 person say buy, and then 1 person say underperform. Underperform is basically another way of saying light selling. That's like heavy selling, buy, light buying, and then strong buying. But that's not a recommendation. Again, that's just analyst ratings. I'm just showing you guys. So around, they've been selling, come on, show me the number. Come on, it's not doing it. Oh well. So, just move this closer to me. So we have analysts. So, technical analysis here, support and resistance. So as you can see, it looks going down and it's going up. But from here, all the way here, if you were to draw a line that looks kind of flat, it is going up. So around here, this is where it broke resistance. Boom. Even though that dropped, it's still above that. And then that's how you get that curve. So I get it. So so it's just, yeah, it's a lot of, yep. I just see a strong trend going up. So I do agree with this analysis of the support and resistance. Interest for people to short. This is very important too. I don't know how to read this one, because I barely look at this one that much, but I'll probably explain it and learn it in another video and say all that. So yeah. So any insider activity for buying, the last time they bought was on 12/31. Let's look at that. So they bought, that's not a lot. I mean, okay, 129 shares at $46. So that's what they bought for that price, and that was it. This is the meat and bones. This is what I want to get to. So they lost their 2020 results. They beat it. They beat it. They beat it. This is, I mean, these estimates, they already counted them in, because I guess they know how much they have at hand, like cash at hand, and what they're gonna earn more or less. So yeah, that's about it. So key indicators, we have return on equity, it's dropped. That doesn't look good. That's okay. See the margins. That's pretty low for margins. Wow. Even around 2017, that's fine. But after 2018, that's it. Wow. The debt went up. Like I said, over 50%. I wouldn't be surprised. And I didn't see that number before the video. I'm seeing this now. But again, I'm going to assume a lot of companies are 50% well over debt. Cash reserves. So yeah, they seem like an okay company, but I still like Citi Trends. I guess people like that company more. Yeah, the operating, yeah. And the net, oh, that's not good. That's definitely not good. The net income's been dropping. More debt. Yeah, it's okay. I'm surprised this company is the top earner, to be honest. I'm very surprised. So yeah, there you have it. Hibbett Sports against Citi Trends, and I like Citi Trends. I've never even heard of Hibbett Sports. Maybe they out west or Midwest. Yeah. I'm not sure what they sell. Okay, athletic shoes, sportswear, mix of localized apparel, footwear, equipment, like Foot Locker. I'm pretty sure Foot Locker's like, I thought Foot Locker would have been the number one, but these guys surprised me. I'm very, very surprised. So yeah, there you have it. Hibbett Sports versus Citi Trends, and there you have it. They're about the same price. Yeah, these guys are about the same. See, now let's look at numbers again. See, earnings. It's Hibbett Sports. Hibbett Sports 22. Finally on. I might not see them on here, but they do show. That doesn't matter. That's like for dividends. So the PE, yeah, they have a higher PE. So they're growing faster. You know, it's interesting, like some of these companies you don't even hear of, and then companies that you do hear of, you would think, wow, you can't believe people shop there or whatever, and then maybe they do, maybe they don't, and it's because they have a lot of cash at hand or good money management skills as well. I think that's why the company does really well. See, they have high returns on Hibbett Sports. So yeah, supposedly better returns, but that's not what it looks like this year. I will give them this. I think they're pretty even just because Hibbett Sports has less debt, but their net income and all that, it's just the numbers just don't mix. I just don't see Hibbett Sports as a top earner. That's just my take on it. So my guess would be for this year that Hibbett Sports will drop from being the number one earner by the end of the year, and I think Foot Locker will be the top earner above Hibbett Sports. And of course, Citi Trends could gain momentum with the way it's going up, and could pass some of these. But yeah, I just don't see Hibbett Sports as a top earner for that long, especially for this year. If they are, I'll be surprised. So yeah, there you have it. Thank you guys for watching, and I'll see you guys in the next one.